Let's look at the latest Canadian Real Estate Association housing data for March 2023. First thing, good news. Sales are up 1.4%. Good, right? Well, not so fast. Number of transactions are down 34.4%. So how can you have sales go up, but the total number of transactions dropping by a third? Okay, let's look at this in a bit more detail. So let me zoom in here and I'll show you the charts in a second. So national home sales rose by 1.4% month over month in March. Okay, so they're up, but they're comparing February to March. Remember, real estate is an incredibly cyclical industry, especially in places like Canada, where very few people typically go shopping for real estate in December, January, and February. Why? Well, it's kind of cold, so very few people want to deal with that sort of temperature when you're trying to look around for a house, right? So when is the peak of the real estate market on an annual basis? It tends to be the spring market, March, April, May, and sometimes June. So yes, you'd expect a rise, but it should certainly be much higher than 1.4%. So that's quite an anemic number, very, very low number compared to what you would normally expect. Now, the actual not seasonally adjusted monthly activity came in 34.4% below March 22 numbers, right? So this is where you really want to pay attention. Yes, it's interesting that it went up 1.4% from February, which you'd expect to go up by more than that. But the key comparison there is the same month the previous year. Now, yes, that was also the first month when the Bank of Canada started raising interest rates. And obviously that has had a significant impact on affordability. And people basically right now are struggling to meet their financial obligations more and more. So it's not surprising, at least to me, that housing activity is down by that much. The number of newly listed properties dropped a further 5.8% month over month. So not only are we seeing this massive 34.4% drop in number of sales, but the number of listings is also dropping from the previous month, which is very unusual for a March statistic, right? You'd expect listings to be going up, into the spring market, not down from February, right? So again, this further highlights the fact that people probably don't really want to sell because they realize that if they sell their home right now, they can't really afford to move up to buy something larger. So very few people are actually willing to sell their properties, and even fewer people seem to be interested in purchasing them. Now, this index number that they have here, the MLS Home Price Index, edged up 0.2% month over month, but was down 15.5% year over year. So this is their adjusted number. So prices are down 15.5% year over year, but they're up from February by 0.2%. The actual not seasonally adjusted national sales prices are down 13.7%. All right, so I just showed you a whole bunch of statistics and a whole bunch of data. Let's actually look at some of these charts to make a bit more sense of them. First off, we have the 10-year monthly moving average. So that's the black line over here. And then we compare that to the monthly home sales. So how to interpret this data is whenever your red line is above the black line, as was the case in 2020 and 2022, in those instances, you have significantly more sales than what the historical data would suggest. So that means it's a very frothy, very high in demand market. Whenever you have a significant decline, whenever the red line trails the black line, that means there's fewer sales than what you would normally expect. The only other time we were trailing that black line more than we are currently is during the early pandemic lockdowns when people weren't buying houses because everyone was under lockdown and you weren't allowed to go and visit places, right? A close third would be during the height of the financial crisis over here, but right now we're actually trailing the black line by slightly more than we did back then. So that's an important thing to keep in mind. So again, historically speaking, sales are very low. Residential sales activity, so if you're looking at the total number of sales, what you want to compare is obviously the most recent quarter, which is the first quarter of 2023, with other first quarters of previous years, because as I told you, real estate is very, very cyclical. So 2018, around 450,000, 2019, just below 450,000, 2020, about 475,000. So it's fairly reasonable to say that, on average, you'd expect about 450,000 sales to happen Canada-wide in the first quarter of any given year. Now, the two notable exceptions were obviously 2021 first quarter, and then you have also the second quarter of 2022 when basically people lost their minds and you had this massive spike in sales activity and massive accompanying spike in actual home prices as well. But since then, with affordability being more and more strained and with house prices going up at the same time as interest rates are also going up, we've seen this massive decline in sales, which is not surprising. This chart shows us how many residential new listings there are. Now, the article already told us that there was a decline of 5.8% from February to March, so that's already not boding very well. But if you're looking at the actual first quarter numbers, you actually see that the total number of new listings for the first quarter of 2023 is the second lowest quarter overall from all the way back to 2018, with the one exception being the second quarter of 2020, which obviously was at the height of the first pandemic lockdowns. So it's an issue whenever you're seeing a decline in listings because you might have some issues with your supply later on. Now here, the way to interpret this data here, this is the residential market balance. On the left-hand side, it looks at the number of months that would take to sell all the houses that are currently being listed. So in this case, you see here, the blue line, the blue bar graph, on average, it was about 5 months, 5.5 or so of inventory that you would have. And on the right-hand side here, this shows you the sales to new listings ratio. So what is the percentage of home that are being sold versus new ones being listed? So obviously before the pandemic, as I said before, you had a roughly 5 month, 5.5 month worth of inventory, and the sales were around 55-ish% or thereabouts, right? Then the pandemic hit, lockdowns happened, so then your number of months of inventory went sky high, surpassing 9 months for a little bit there, and then it got suppressed massively when people started buying up a lot of real estate left, right, and center, and especially further away from the larger cities. So then your sales ratio went all the way to the mid 80s, which is unheard of, really. And then obviously the number of months, dropped all the way to below 2 months of inventory that was available. And right now, it's gone up a little bit, and now we've seen a slight decline again in terms of the number of months that it actually takes to sell a home. But that's mostly because there's very few actually being listed, not so much that there's high demand, as was the case during the pandemic. This graph shows us the year-over-year percentage change in home prices. So obviously, everything is negative. That's zero right there. So the province that has had the largest province-wide decline is Ontario, followed by BC, which then is followed very closely by Manitoba, and as well as by Nova Scotia. Now, this being said, remember, real estate is incredibly, incredibly local. So in any one of these provinces, you can find multiple properties in specific neighborhoods or even in certain villages or certain cities where prices have actually gone up. But province-wide, you can see everything is negative. And then Canada-wide, yes, prices have dropped by that 13.7%. That's where that 13.7% comes in. Okay? Right. Now, this is the residential price data. So the red line, that's the average data over here. And you can see here, that one is not seasonally adjusted. Then they applied the seasonal adjustment, which is a statistical way of kind of smoothing out the data. And that gives you that HPI average that they were talking about that has gone up 0.2% from the previous month, right? Now, if you basically now you're taking this blue line, and if you break it down, so now that blue line becomes the black line, that becomes the composite here. And now if you're breaking it down by the different subtypes of homes, so 2-story home, 1-story single family home, townhouse / row house or apartment, you basically end up with this data over here. So obviously the most expensive houses are the 2-story single family homes, and they're here, and you can see they're sort of flatlining right now in terms of the price corrections, as it were. But overall, we've still seen this massive decline year over year. Now, this is probably a really interesting chart, at least in my opinion. This actually looks at the year-over-year percentage change over time, over long periods of time, because here you're just basically seeing what happens to prices, right? They're just constantly going up from $200,000. There's a bit of a pullback, but what were the actual yearly changes? Well, it turns out that the current correction is actually the largest correction that we've seen in percentage terms, in year-over-year percentage terms, going all the way back to the early 2000s. The other two corrections that we had was a relatively shorter lived compared to the 2020 market in 2008, 2009 due to the financial crisis, but it wasn't that big of an issue in Canada, really. And then we've had the 2018, 2019 pullback over here, right? That was before the pandemic actually hit. So percentage-wise, this is actually the largest pullback. And yes, they're saying that right now, this number here is declined by 0.2% less than it did beforehand. So I guess good news. So is this it? Is housing finally done correcting, and are we going to go back up again? Well, maybe, maybe not. One thing I'd like to look at is what's inflation doing versus what is the Bank of Canada overnight rate doing? Because as we've seen, when the bank increases their rates, it has a massive, massive impact on housing. Again, that's a well-known factor. The more money costs, the lower prices go, right? So the latest inflation numbers that just came out on Tuesday showed us that inflation is back down to 4.3%, which is still above the 1 to 3% target that they're aiming for, but is much lower than the 8.1% that was reached back in June. Now, the Bank of Canada had last week decided to maintain their overnight interest rate at 4.5%. So that's where it is. Now, the reason this is incredibly important is because the experts had been forecasting that the Canadian economy is going to be suffering massively unless, due to high inflation, unless the Bank of Canada would be able to raise their interest rates above the inflation rate. Now, I've taken the exact same data that I just showed you on those two data sets over there. And here, inflation now is in red. It's that line. And the bar graph that showed the interest rate is this blue line over here now. You will notice that this is the very first time since about 2020 that the inflation rate is finally below the target interest rate by the Bank of Canada. Why does that matter? Well, because it typically takes between 3 and 6 months for the broader economy to react to whatever the Bank of Canada is doing. So now that they've finally managed to lower inflation enough that it's actually below their rate, if inflation remains relatively low, or by historical standards, I would say, in this range, and the bank is able to maintain their target rate a little higher than inflation for the next few months, this should further push inflation down. The more it pushes inflation down, the more likely the Bank of Canada is finally going to be to start lowering rates again. That's probably not going to happen before 2024 or even mid 2024, but we will see. And in those cases, that's when housing will finally start booming again, or at least benefiting from it. Because as long as interest rates stay high, people cannot afford current houses. House prices are still ridiculously high relative to what the average person can afford. Foreigners are currently banned from buying in Canada, at least for next year and 9 months or thereabouts. And even beforehand, they only made up about 4 or 5% of transactions. But that's a different story for a different time. Now, so in summary, are we out of the woods yet? Not quite. But this is definitely encouraging data that we've seen over here if the trend persists. And yes, some of the housing data would suggest that we're maybe coming to an end of the correction. But keep in mind, this is supposed to be the hot spring market, it's very, very far from being so. So I'd be very careful into jumping into real estate just now, unless you can definitely afford it. And it's much more likely that affordability is going to be improving over the next few months and year plus as the Bank of Canada is able to eventually start lowering rates, assuming that inflation will be brought back into control beforehand. Anyway, tomorrow, TerraNet releases their own housing data. So I'll be covering that as well and try to, depending on what that data says, try to make an overall conclusion between the two sessions. So if you're interested in that, link in the description down below. Have a good one.